Hi, everyone, and welcome back to Foreign Currencies with Scott. So, we finished yet another week, and we are now finally at 25% profit. So, between July 1st of 2025 and January 16th of 2026, we are at 25% profit. And remember, we're going for 50% and our $1,000 challenge, trying to turn 2,000 into 3,000. It is already at 2,500. So just a phenomenal year in this challenge, and we're going to keep it up. Now, the title of today's episode is Friday Was a Winner. Why didn't we trade? And we're going to take a look at the difference between our trading premise and our trading method. So, what is our premise? Our premise is that after the New York close, the British pound US dollar pair will get at least as far as 30 pips away from the New York close. And then before doing anything else, it will revisit that New York close. So sometimes it will revisit and then go back on its way up. Sometimes it will go 30 pips up and revisit and then keep going down, or it could start going down. You get the picture. But the premise is that the New York close will be revisited before the New York open on the next day. Sometimes that stretches out a little bit and we have to hang in there in the market. But that premise is essentially the return of the pair to the New York close. So that did happen on Friday trading day. Why didn't we enter? We didn't enter because we have a specific method that we use, and the criteria for the method was not met. We're looking to be more than 30 pips away, have a candle that moves back towards the New York close, and then we enter a trade on the following position, following candle. What happened was we did get 30 pips away 2 to 4 times during the morning, but the pair never closed more than 30 pips away. So every time we went back towards the New York close, we were within 30 pips and not 30 pips or more away. So I hope that clears that up a little bit. Now, if you took the method of just saying the instant the pair gets 30 pips away, I'm going to put in a trade to go back, then more power to you. That would be a different method than we're using. That's merely our premise. But it could be profitable as well because the premise certainly holds true. We just want a little bit more assurance before we enter our trade that that is what the pair is going to do and not breach through 30 pips away and simply keep on going with never looking back, because that happens on occasion as well, as I hope you know by now. Okay, so we have a couple of short videos here where we're going to look at Friday's price action and then our overall profit since July 1. But we are doing very well in this $1,000 challenge, just a little bit more than halfway through the year when this started on July 1. So it's coming up Sunday evening now. A good time for you to enter all your lines in for the Monday morning London Open. Despite the Martin Luther King holiday here in the US, the market will continue to be open. I know I was wrong about that twice. For Christmas Day and New Year's Day, there was a big gap in the chart where no one was trading. That will surely not be the case for MLK Day. There will be trading. London will open on Monday morning. Okay, so we'll see how the first 3 days of the trading week go when we check in with you again on Wednesday evening. Until then, good trading, everyone. Bye bye. All right, so we're going to take a look at the last two trading days of the week last week. On Thursday, we had no trade. What we're looking at on the screen right now, the vertical bar on the left represents the Thursday New York close. Now, we actually had no trade using our method on Friday either, but we did get close to having a trade And our premise was met, even though the method that we used to profit off that premise did not give us an opportunity to enter. So you can see as the pair moved away from the New York close, it went up a little bit and then back down. And then by 2 a.m. or so, it was climbing. By 3 a.m., it was still only at 89 pips, and we opened it, or excuse me, New York closed at 81. So we were only 8 pips away. We needed to be 30. So no trade at 3 a.m. when London opened. But as you know, we tend to keep an eye on this and see if we get any more opportunities to enter a trade before New York opens the following day. And sure enough, 30 pips away was breached between 5 and 6 a.m. We can see these two candles here. You can actually see two more as well between 6:30 and 7. But they really did not give us a great opportunity. I suppose one could say there was an opportunity here. If you looked at it very closely, you would see that the 545 5-minute period opened at 134.115, which is exactly 30 pips away. But we would have been hard pressed to get a trade in at the exact instant that were the case. And you notice also that the 5 minutes prior, the candle body did come up, but it did not come up that high. So we actually gapped a pip or so between those two periods to get to that place. So really what we're looking for is a close above 30 pips, then a move back towards New York on a close, and then we will enter on the very next period. So if these two candles here, this red one and the following green one, were both above the 30 pips away mark, and then the subsequent candle, this one, was a red candle, meaning heading back down towards the 30, the New York close, then we would have entered a trade at the opening of the next period. But as you can see, even using that logic, opening at the beginning of the next period would have been well off of 30 pips away. So our premise was met because, as you can see, we did puncture that 30 pips away and then never got that high again. We punctured it a little bit again between 6:30 and 7, and then by 8:30 we went down, and then there we go, between 10 and 10:30 we went down again. And so the premise was met. What is the premise? The premise is that when we get 30 pips away in either direction from the New York close, before moving on for the day, the pair will revisit the New York close. So that did happen, just didn't happen in a way that gave us an opening. So that's important to keep in mind. Now, if you feel that you can trade this way, you would have to be just sitting here and completely watching this. And as soon as the pair went above 30 pips away, you would make an entry. So on this particular day, that would have worked out for you. Not so sure if it would have worked out half the time or more than that. And it is certainly not something that our method calls for. We're looking for very specific conditions. But again, the premise was met, so it is a potential trade if you're so willing to take that risk. Okay, so I did want to take a look at our spreadsheet and see where we were for the overall $1,000 challenge. So you can see this top number here is $24.99 and 92 cents. So we are almost at 2,500, which is excuse me, which is what the original $1,000 challenge would have been looking for at the end of December. It took us 3 trades in January to get there, but still very close to 2,500, if not there completely. Now, overall, since Our challenge began on July 1. We are up 25%. So just a little over 6 months, and we're up 25%, which is amazing. For the month of January, so far, just 3 trades, we are up 10.2%. So we are having a very good January so far, starting at 22.69, right now at 24.99 with just 3 trades and all winners.